Alright guys, this is a comprehensive walkthrough of the California real estate practice 110 terms for chapters 8 through 15. So let's get on with it. The listing appointment is the salesperson opportunity to get the listing from prospective sellers. Listing appointment. Property profile is a report about a specific piece of property, including legal description, property characteristics, and tax value. Property profile. Comparative market analysis, also known as the CMA, is an analysis brokers use while working with the seller to determine an appropriate listing price of a seller's home. Comparative market analysis. Curb appeal. The first impressions of a home when seen from the street. Curb appeal. Sales comparison approach. The best for single-family homes, condos, vacant lots, because sales info is readily available and easily compared. Sales comparison approach. Caravan. An opportunity for all MLS listers to see a home as a preview. Caravan. Selling price is the price a buyer actually pays for a property that may or may not be the same as the listing price. It's pretty much what it sells for. Selling price. Net sheet shows the approximate amount of money sellers can expect to receive for a specific sales price. Net sheet. Top reasons homes fail to sell. Price, condition, location, noise, and listing agent. Those are the top reasons homes fail to sell. Ready, willing, and able are buyers who are prepared to enter a purchase contract, who wants to buy, and who meets the financial requirements to purchase. Ready, willing, and able. AIDA is a marketing acronym standing for Attention, Interest, Desire, and Action. AIDA. Federal policy on real estate ads must be in compliance with equal housing opportunity guidelines. Federal policy on real estate ads. Advertising red flags are very specific language to neighborhoods, demographics, race, sex, or gender. Also, language in reference to monuments is unacceptable. Basically, they're very specific ads within your real estate marketing. Advertising red flags. Promotional mixes are combinations of promotional methods to reach the target markets and reach your goals. Promotional mixes. Exclusive agency relationships are with sellers and listing brokers that promise to pay commission to that broker after the sale of a property. Exclusive agency relationships. Real estate agency disclosure. To disclose, elect, and confirm buyer and seller agency with the broker. Real estate agency disclosure. Buyer's broker. An agent who represents only the buyer and has a fiduciary duty to find a home at the least price in compliance with the principal's terms. Buyer's broker. No agency relationship. Buyers working with salespeople without an obligation of the benefit of a legally binding relationship. No agency relationship. Baby boomers, born from 1946 to 1964, accounting for 81 million people, 40 million homes, and typically traditional single-family homes. Baby boomers. Generation X, born from 1961 to 1981, accounting for 44 million people who value home ownership and tend to have larger homes. Generation X. Generation Y, 1982 to 2000. These are the millennials. 70 million new first-time home buyers, and we are the future. Generation Y. Generation Z, 2001 to 2025. We're not able to buy homes yet, but that is what Generation Z is. Buyer's profile is a prepared list of questions used to determine motivations to sell. Buyer's profile. Pre-approval versus pre-qualification. Pre-qualification is just simply a verbal agreement without official numbers run, or credit run for that matter. Pre-approval is written lender commitment with actual numbers run, usually lasting for 90 days. That's pre-approval versus pre-qualification. Major buying signs. Touching, lingering, asking specific questions, visualizing possession, and asking for outside opinions and making objections. Those are major buying signs. Real estate agency disclosure. used in 1 to 4 residential unit transactions requiring written documents explaining the nature of agencies to a seller before overriding with a buyer. Real estate agency disclosure. Buyer's profile makes up all info regarding all financial resources of a person. Buyer's profile. How to view buyer objections. Buyer objections are to be viewed in a positive in the sales process, as it shows buyer's interest and adds feedback. That's how to view buyer objections. Deposit receipt is a valid, non-rescindable binding contract. Deposit receipt. Purchase agreement includes all the terms of the sale, including agreements about financing. Purchase agreement. Earnest money deposit, also known as consideration. A buyer's deposit in cash or check about 1 to 3% of the purchase price to show real interest in the property. Earnest money deposit. Covenants, conditions, and restrictions, also known as CC&Rs, are contingencies that affect title, rights, and easements. Covenants, conditions, and restrictions. Common contingencies are financing, title to property, condition, transfer disclosure statement, and inspections. Those are common contingencies. Proration is the process of distributing or dividing expenses or income between sellers and buyers, like property taxes and interest on loans. Proration. Early move-in allows buyers to take possession. Early move-in allows buyers to take possession of a property prior to the close of escrow using an interim occupancy agreement. Early move-in. Counteroffer. It's an offer made in turn by rejecting an unsatisfactory offer. Counteroffer. Contracts of sale. Those when the seller becomes the lender to the buyer. Contracts of sale. Conventional loans are made without government guarantee. Conventional loans. Conforming loans made to follow FNMA and FHLMC conforming loans. URAR 1003 is an order for an appraisal. URAR 1003. Mortgagor is the borrower. Mortgagee is the lender. Deed of Reconveyance is a document that shows that debt has been repaid and clears liens from property. Deed of Reconveyance. Margin. The profit for the lender in an adjustable rate mortgage. Margin. Partially amortized installment note are regular level payments on principal and interest, but uses a balloon payment at the end to cover the balance. Those are partially amortized installment notes. Interest only, also known as straight loans or term loans, are higher interest payments, but a larger payment is made at the end of the term to pay off the principal. Those are interest only loans. Unsecured loans are ones that have no security of payment or debt from the borrower. Unsecured loans. Principal, actual loan amount. Interest, cost of borrowing. Term is a loan's life, typically from 15 to 30 years. Deed of Reconveyance returns property back to a borrower once a loan is paid off. Deed of Reconveyance. To execute is to sign or enact, typically in a contract. Execute. Trust deed is a security instrument that conveys title of real property from trustor to trustee for loan repayment. Trust deed. Security instruments are used by lenders to secure promissory notes. Security interests are the claims a lender has in a property of a borrower. Amortization are total monthly payments broken down. Amortization. Installment payments are loans paid in equal monthly payments until paid in full. Think full amortization. Those are installment payments. Trustee in a loan are the banks. Trustor in a loan are the borrowers. Promissory notes, signed by the borrower stating a certain amount of money has been borrowed, ensuring that debt has been made. Promissory notes. Collateral is security pledged for repayment of a loan. Property is usually the collateral in home mortgage. Collateral. Chain of title is a chronological summary of all useful documents discovered in a title search regarding the ownership of a property. Chain of title. Marketable title are those who are in clear saleable title, reasonably free from risk or litigation over possible defects. Marketable titles. Standard policy insurance is used to home buyers that only covers matters of record. Standard title policy insurance. Payoff demand is the amount of unpaid principal balance, including interest and other payments. Payoff demand. Hazard insurance protects the owner and lender against fire, storm, vandalism, and other hazards. Hazard insurance. Documentary transfer tax is collected on all funds made to the seller and buyer separately, required by law to make the completion of every real estate transaction. Document transfer tax. The closing statement is an accounting of funds made to the seller and buyer separately, required by law to be made at the completion of every real estate transaction. Closing statement. Good funds have been cleared by the bank, such as a cashier's check, certified checks, or wired funds. Good funds. Impound accounts are trust accounts set up for funds aside for future costs relating to a property. Impound account. Walkthroughs are the buyer's final viewing of the property prior to the closing, to be certain that it's in the same condition as when the purchase offer was made. Walkthroughs. The seller signs a grant deed conveying title to the buyer before escrow closes. Grant deed. The listing salesperson commonly opens escrow. Listing salesperson. Escrow procedures may vary according to local custom. Hazard insurance protects the lender and the buyer. The closing statement outlines the flow of consideration through escrow, as well as adjustments and disbursements. Closing statement. In escrow, a seller is commonly credited for the sales price. And that is it.